All right, so two things I want to do today. Number one, open up the mic for some people if you want, because I think Tom had a good idea. Share, because by sharing, that's why guys like Brad will share. It helps a lot. So if you have something to share of what keeps you patient on days and conditions like these where it's slow, lighter volume, lower volatility, tighter ranges, say I'll share. It's not easy, but it's helpful when you get out there, and we don't have to share your first and last name and everything. Just what helps you stay patient. I'll open up your mic and we'll do it. The other thing is, so let me know whoever would like to share something. Pop it in there and say, I will, and then we'll go through. I suspect there isn't going to be many, but there's got to be a couple people that have something that they do that keeps them patient in slower markets. Because once you start get going, when you're in this business, once you start to understand it more and more, you'll want faster markets, right? You want markets that'll move. And then when you don't get them to move, you get impatient because they're not moving. And so how do we fix that? One of the things, this wasn't really what I was going to talk about today, and I'm going to talk about a little bit more, but it brings up an important part. Remember, these meetings are just week-to-week sessions to keep people updated as to what the hell's going on, what's changing, bring in some guests, share some content, and almost assume like you're in an office where you're going to meet with the guys once in a while. Just remember, pretend like you're in a marketing company or some sort of sales company or an insurance company. Once a week you're going to meet, right? And if you have a good meeting, that means you leave all your cell phones out the room and people are making eye contact, they're talking, they're sharing, they're communicating, right? And so it's important to have that kind of venue when you're learning, because education should not stop. So patience, what is it that we could do to become more patient? The reason why you become impatient is because you know that if I miss a move in a slow market, that the next one could be hours away. So it becomes like a self-fulfilling prophecy in a negative way, where I can't miss a move because if the one miss and I can't find anything for 2 hours. So you end up over trading and you end up missing the move because you got set in your head that you can't miss a move. You have to trick your mind. One way to stay patient is, who cares if you miss the move? Don't ever say, I can't miss this move, because you're going to miss it. Don't ever say that it's a slow day, I got to catch something early because it's going to really slow down, because you won't catch something early. Market might open and be fast anyways. So don't say you can't do this or can't do that, because that's exactly what you will do. And it'll help you stay patient instead of forcing you to become impatient. Because when the market's slow, it's vital to be patient. Now, volume. When we talk about how to put ourselves in a position to understand what kind of day it is, you got to first start with this, and that is, what's the volume overnight looking? Is it above average? Is it average? Is it below average? Gives you a sense of what to expect coming into that day. Now we're entering a period where, people will say summer markets. Sometimes summer markets are busy. The real reason why we've slowed down is because a lot of the uncertainty has become certainty. U.S.-China trade has gone from are they going to do it to they baked in that they are going to do it. Brexit has been kicked out till 2039. They've kicked that can. So that uncertainty is no longer here. So trade war, gone. Brexit, gone. This Mueller report, even though there'll be some negative things about Trump, the worst of it gone. Just maybe a small gray cloud that was over the markets. There's really no headwinds, no wall of worry is the phrase that Brad used last week for the market to climb over. You would think a wall of worry and it goes down. It does. But then when you remove that worry, boom, it's got that nice bounce to rally. And when you have no worry, when you have no uncertainty, it just grinds, and eventually it grinds higher. But it's just a grindy market. And then you'll get a day where it reprices, then it slows down again. Don't worry about what is it going to, the Fed, that's another thing that's gone away. The uncertainty of what the Fed's going to do went from raising rates every other meeting to what are they going to do to doing nothing. And now Fed Evans came on in the last few hours and said they might not do anything with rates through 2020. Market's kind of like that. So there's nothing to reprice this market. And so you're going to get, if you were to have a high and a low, you're going to get a tight range between those consolidation boxes. I encourage people to visualize charts as boxes, find the box, and understand that the boxes might be longer when it's slower because the congestion lasts longer. What makes a market go up are people who are too short. What makes a market go down in price is people are too long. There isn't a lot of people long or short. It doesn't go up or down as much. So the more volume, the more movement, period. So when you come into a session and the volume is light, you're not surprised if the range is going to be tight. High volume overnight, indicative of usually better price action, higher range, bigger moves, a move, and you can get away with being impatient. Markets will allow you to get away with bad habits when it's fitting your style, and it'll bring you to your knees when your trading style isn't fitting the context of the market. That's the huge adjustment in trading, is not to trade the same way every period of how the market is acting. Well, I'm going to trade a slow market like I did a fast market. Not going to work. I'm going to trade a slow market like I do a fast. That's not going to work. Either way, you like slow markets, then it gets volatile, you get killed trying to apply the same style. Adjust. You have to adjust to be, I always think of things like a tree. Not everything I think of like a tree, but I think a tree is weak if every time it's windy, branches are breaking. Right? They're not supposed to break. They're supposed to bend. They're supposed to give. They're not supposed to break. It's a weak tree. Every time it's windy, there's a bunch of branches underneath it. Same thing with a trader. When it gets windy, you can't break. You could bend with it, but not break. Markets are constantly changing from one kind of element to the next. And if you don't trade along with it, is when you go from, it's making a little money, boom, gave it all back and then some. One of the common stories that I hear after being in this side of the business for 5 years is it takes a long time to build up profits, if they do, in a short period of time to give it back. It's not easy come, easy go. Hard to get, easy to let it go. It's a common story that's been shared through the years, and something that, if I didn't educate and get myself around people, I wouldn't have been able to say. Now, just an update, Brett, who is Brad's friend of mine. Brad and Brett are closer than I am, but I traded with both of them at a prop firm. He's going to come on in a few weeks, I think May the 14th. Before that, Dr. Steenbarger is going to come on May the 7th. So I'm going to send some videos. If you're not aware of who Brent is, I'll send some videos, or Google, YouTube, CME TV, and he's in one of those episodes. He doesn't sell anything. He doesn't have a website. Neither does Brad. They're just helping others selfishly and unselfishly, because believe it or not, by teaching, you're learning, by helping and contributing. How do I avoid what, Mark? How do you avoid what? Well, number one, you got to adjust. What are you doing? So here, this is a real general question, though. How, personally, I go into capital preservation mode. I'm good at adjusting, not trying to play a particular style that's not conducive to the market. So when your strategy is working, the market changed, your strategy didn't, your market changed, and you didn't change with it, you gave back a lot of what you made. Now, when you don't know what you're doing, people have that story more often than I would, or that people who have been successful do. When you just got lucky because the market let you get away with your bad habits, that's the example of it taking away a lot in a much shorter period of time that you made money. That's what I mean by that. Because people without skill will accumulate money and they have to grind it out because the market's just letting them get away with their bad habits of adding the losers, holding on to stuff until it turns. You know what I mean? That's what I mean by that. That's the stories I hear from people who are retail that aren't successful, haven't been successful, is 2 months of profit gone in 2 days. You're not if that's been the case, then you haven't developed a skill yet. It's just random. Market lets you get away with bad habits. I'll tend to, if me and guys I've traded for a long time that have gotten consistent, is flipping around, where it'll take a long time to chip away at some profits. Why? Because they're going to capital preservation mode. But guys get excited. Beginner's luck, you could call it, or whatever else. When guys grind out a profit, bam, give it right back. You know what they were? It's almost like they were hustled, like in a pool game. They were hustled to make a little bit of money, and then wham, guy took it all back and then some. That's what the market does to you when you don't know what you're doing. All right? So I wanted to start the meeting off with, hey, if we are getting into a slower period, know it. Your volume personally should be less. Your frequency should be less. Your patience should be higher. Don't worry about missing trades. The more you worry about missing trades, the more trades you're going to miss. All right? That's important to note. Steenbarger and Nord, they're coming May 7th and May 14th. The reason I keep bringing that up is watch these guys, listen to some of the stuff that they've done, because you'll have better questions, and really good questions spur better conversation. So go on to CME Radio or CME TV, and this Anthony Credelli is the guy who hosts that stuff. Search it, YouTube, search it, and find Brent. He's done a couple things with him. He's going to be here in a month. Brett Steenbarger wrote a book. You don't have to go out and buy his book, but big on Twitter. Learn a little bit about him. You're going to have access to him May 7th. I think it's May 7th. If that's a Tuesday, then it's May 7th. Are we getting into the dog days of summer? No, it's just a spell where, like I said, there's not a lot of uncertainty out there. So traderfeedblog.com is how you could follow Mr. Dr. Steenbarger. Traderfeedblog.com. N-O-R-D, Brett's last name. N is in Nancy, O-R-D is in dog. Those that, I haven't done this yet, but a couple weeks ago, I opened the registration for these Tuesday sessions to a broader base of people. I'm gonna, if your registration gets canceled, that's the reason. These are meetings just for edge elite guys, and once in a great while, I'll bring in other people. I'm glad you joined. Doors open. It's just not always open. So if you see a registration cancel, that's why. If you want to become an Edge member, go to the site, take a look at it. You'll like it. Everybody who does it likes it. Everybody, 100%. The only people that have ever invested in my course don't like it are the ones who never went through it. Now, on to what I want to talk about, and I'm going to switch to a what am I going to to a whiteboard here. Tell me if you guys see the whiteboard. Nobody wants to share any kind of tips of what helps. That's fine, because I kind of snuck up on you, but you should. Nobody should be afraid to share. Everybody should want to share. Get out there, talk, communicate. You got to put yourself out there. I touched on this yesterday, and because I thought about it over the weekend. Much of the content that I come up with is some of it I schedule, some of it I line up, and then some of the stuff over the weekend I just start thinking about how to explain things and help people. And that's where a lot of these meetings come from. That's why they're so good, in my humble opinion. Ron's going to share. What are you going to share, Ron? How great a guy I am? I'm just joking. Let me before you share, let me go over some of these things. And anybody else wants to share, just share what's helping you, keeping you patient. Do you have a mic that works? You have to have a mic. I'll light you up in a second. So Ron will share. Before he does that, I touched on this yesterday, but I want to go over it with a little more clarity today. The market is going to go to each one of these dots. It doesn't know when. It doesn't know exactly where these dots are, but the market is going to create a pattern every day. It doesn't know the pattern it's going to create. Like so many retail traders think that the market has a predetermined path. It knows what it's going to do, and you got to figure it out. No. Two teams don't know how the game is going to be played, and they take the exact same shots throughout the whole contest. Nobody knows how the game is going to go. We have an idea, but nobody knows until the game starts and we start mixing up to see who could win and where they could take it to. So just imagine these dots as targets. Whether you want to look at them as magnets on the heat map doesn't matter. You're trying to get the market to go to a dot from point A to B. That's called, and don't forget this, that's called a move. We're trying to catch moves. We're not trying to catch chop, right? We're trying to catch a move. Whether it's a move that is a breakout, if it's a fade where you sell into resistance, or you buy into support, buy the low. If it's a trend where you try to buy a retracement in an effort to see it follow the trend back up, or down move, sell a pullback because you think it's going to continue in its move lower. We're trying to stay out of this. We're trying to avoid being the wrong way in the move. And then we're trying to catch the move. So in that order, you're trying to catch a move last, not first. You're trying to stay away from the chop, and you're trying to keep yourself from being the wrong way on the edge of a cliff. And you can interchange these two. If you're doing good at keeping yourself off the wrong side, you're probably not getting chopped up. If you're not getting chopped up, you're probably not on the wrong side. The third thing is you're looking to catch the move. Baseball analogies are so good because these guys are just trying to stay alive to catch something that they could swing and hit. And there's and if you notice, there's all different kinds of styles, right? And batting stances, and guys who could hit better pitches than others, guys who have holes in their swing that are different. The key is to have a bat that goes through the strike zone. And the ball happens to meet it there, right? So when you're early on to your trading career, which many of you guys are, don't worry so much about exactly what your batting stance is going to look like in a couple years. Just swing through the zone here. Be consistent and try to read something that isn't as random as it was before you implemented some skill. But you're trying to catch what? The move. If the proper phrase, industry speak, is, did you catch that? Catch that move. Where did that move end? Where did that move start? Why'd they take them lower? Right? Did I catch? So when you look at, to erase all these drawings and just put the dots back, when you're looking to catch a move, you're looking for it to go after you got in a timely fashion. Now that means something different for different people. Timely fashion. An investor, to a swing trader, to a day trader, to a scalper, means different things. Timely fashion means different things. But nobody, if you think about this for a second, nobody will get long and say, I think it's going to go down first a lot and then eventually go up. Well, then what the hell are you buying it now for? I think it's going to go down before it goes up. No, you're thinking that your timing is pretty accurate to when it goes up. That's why you're buying it there, because you're chiseling out a location. You're going to hear from Brent. He's a guy who pieces in. He's got, I think, a style that I think a lot of people are going to like, because he'll scale in and scale out, but he's a much longer term trader than I am, than Brad was. Brad would be like in the middle maybe of me and him. But I think what you'll see with him is he'll piece in because he's selecting areas. He isn't piecing in because I'm going to buy it here, so if it goes down in here, I'm long from up here, that's good. No, he doesn't expect it to go down here. He's got an area that he wants to piece in and build a position. He wants to build a position, but he doesn't want or expect it to go way down. I knew that could happen. Nobody would make good, clear decisions based on that. So you're expecting the trade to go your way somewhat soon. Now, if you expect it to go right away, you could get impatient in the trade. But you're expecting it to go to the next dot. You got it? What it does around this dot could be the awful chop, head fake, all that BS. If you're bearish, you're looking for it to go to the next dot. When is it going to go to the next dot? When is it going to go to the next dot? It has no, who cares where this dot is? The dot's below this one, so you're bearish, right? You could go from bullish to bearish 10 times inside what it does with this dot. But when is it going to give you the next move? When could I get in? And very shortly afterwards, am I going to get the break in this case? And it doesn't have to be the same exact thing for every single person. It just has to be consistent to that person. And if you wait, then you'll miss some, but you won't get impatient about worrying about the missing. If you worry about missing something, you're going to miss it. you have a couple things you look for that will call this break. When you see them, swing. When you don't see them, don't worry about it going without you. Do you hear me say? This market's, if it goes, going to go without me. That's me talking myself into not being anxious. So let's go to a chart today. In order to do that, I have to change a couple things around. Let's go. You guys should see the screen share that you're used to in the room, correct? Does everybody see my screen? Okay, good. So there was a dot up here it chopped around. Here was the next dot down here after I closed the room to 11.5. Here's the move. Are you trying to get short here? Why? If you weren't trying to get short here, why are you trying to get short there? And I'm not saying there was no reason to get short here. But what I am saying is, were you trying to catch this move? Just think of a dot to dot, destination to destination. I use a dot as it came to me this weekend as a better way to describe it. What do you see in here to get the market to move lower? You know what? Maybe nothing. So don't worry, you didn't miss anything. It moved without you. Now, this morning, or not too early, maybe an hour ago, there was a moment where the market showed us this move right here. And what I wanted to see was, if you guys are in the room, I wanted to see something that would show me there's stuck longs if I want it to go down. If I think it's going to go down, I want to see stuck longs. Now, I'm not staring at the screen, rubbing my hands together, saying, come on, let me see it, 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 because you're not going to see it that way. You just know what you're looking for, so you're going to see it. You know what the guy's wearing, so you're going to recognize it. Buyers came in here, and I scratched my head, and I thought, why the hell are buyers coming in here, the top of this range? That could be a location for this move to the next dot. The next dot could be higher too, guys, right? But if the dot is below us, you need stuck longs to get there. This range was identified there as the bottom. He came in up here, and that was just a place to take a shot. Then this red came in. Now, after the red comes in, it gives you the either the both the confidence or lack of confidence as to what should happen. And I said, if it's a truly downside trade, right, then you should stay below her because it's a female voice, and it shouldn't take too damn long if we're going to leave this long range. Now, there's a difference between buying coming in down here, here, and up here. Just the way the range was. Doesn't have to be a mathematical difference. It's just, what gets you to scratch your head. You didn't know, as a great detective, you didn't know at what moment in the interview the guy was going to give a tell that he did it, that he's BSing and lying to you. But boy, when he gave you that tell, your eyes opened up and you begin to think that we're going to the next dot. Then when you see this after you're in the trade potentially, you're getting confirmation if you're going to be right quick or wrong. And where's those lines forming? And that's how a wonderful way to read order flow and always know where you're wrong at. Because if you're wrong in random spots, or you just then it's random. There's nothing worse than randomness. You'll never understand it, right? You'll never understand how to build a deck if you don't take the time to learn it step by step. Because if you watch a carpenter build a deck, at least to me, it would be random, right? Everything seems random that you don't understand. Watch a mechanic fix a car, it's random. There's many examples of it seems random to you, but it's not to the person who knows what they're doing. Now, anybody else want to talk about and share? Let's first make sure Ron has a working mic. All I'm going to do, Ron, is allow you to talk. And if you open up your mic, we'll hear you.
Okay, can you hear me?
Yes, I do. Sound good. How you doing, Ron?
Good. How you doing?
Good. So what do you want to share?
Some of the things I do when I'm bored and I need to stay away is I go back and I look at some of the moves that have gone on during the day. I'm looking at my charts and maybe looking for new patterns, or I'm looking at some of the patterns I'm seeing and maybe going back to old charts and see how often they occur and try to compare them. So I can see that, yeah, this pattern or these numbers, they occur, well, not numbers, because when you look at the order flow, the numbers are all over the place. But do these patterns occur other times and how often?
So that's interesting. Like when you're bored, is it typically because it's slow?
Yeah, in fact, like right now, I was just looking at it. It's pretty, it's just going, it's like straight line almost. And I'm just going to stay the hell away.
Well, when you
Because,
go ahead.
because a lot of times what will happen is I'll take one trade and it'll end up being in chop. And then I'm in trouble because I take a loss. And then I'm really in trouble because I get PO'd and I start getting into revenge trading. And then I'm really in trouble.
Well, that's the thing is like A goes to B goes to C, and you
Exactly.
even know it.
And then, well, we were talking about this, Brad was talking about this, and I said, you kind of have to let it burn out. And that's always a bitch because it takes a while for it to burn out, and it's always miserable until it does. And you're in this revenge trading, just, back and forth, because your emotions are so strong. The emotions are driving it, and they just need to burn out.
Right.
At least that's what happens with me.
Well, everybody's got to. It's got to run its course. So how could you not lose money as it's burning out?
Exactly, you can't. And the more you lose, the more PO'd you get, and it's a death spiral, and it goes down. So I like to just try and forget it. Now let's just look back at something else. Or a lot of times what I like to do is I'll go look at some motivational videos just for the hell of it, just to keep my spirits up. Or I'll go read. Something like that.
But you won't allow yourself to stay bored in front of a slow market. That's the key, correct?
That's what I try not to do. I'll just walk away too.
I think, though, that if you're getting angry, noticeably angry, you could let it burn out somewhere else.
Yes, you can. And you know what? If you can get away from it, it will burn out so much faster than if you sit in front of the screen. But it's still, at least for me, sometimes it's just hard to walk away from it because I don't know, it's got a kind of a grip on you. But if you can break that grip and walk away, I would say within 2 to 5 minutes, a lot of it's dissipated.
Well, because what you're angry at, it's like out of sight, out of mind.
Exactly. Mostly out of mind. Because that's where most of this game is played, I think, is in your mind. It is really a mind game.
There's no doubt. I mean, the price, the situations, a lot of stuff is the same, but the way you're handling it is what changes. And if you don't know yourself, if you can't trade yourself, you're not going to trade something else. You're not going to trade the market. You got to be consistent, and your mind is against being consistent. When you're mad, it's anything but consistent, and but it cannot roll. There cannot be avenge trade. I know I'm avenge trading, and I'm still going to allow myself to do it. That cannot happen anymore. So to you or anybody, it's just like you got to do something to know. If you know you're going to make an avenge trade, you got to make sure you don't. However, that happens, and the reason why you do it is because it feels good if it's a winner. Because sometimes avenge trades are winners. That's why you'll do them.
Right. And what can really be a killer is, like you said, it could be a winner, especially if you've gone long and went against you. You took a loss, you turned it into a short, and then it became a winner. Oh, hey, look, that was a piece of cake. Yeah, I called it wrong the first time, but then I got it right.
Mm-hmm.
And I made it back up. Well, no, but it doesn't. And most of the time, it doesn't happen that way. And that's when you find you're in the trap. You've gone long, you took the loss, now you go short, you take another loss because it turned around.
You're in a personal fast market.
Yes.
Yeah, you're long at the top of a range, short at the bottom of a range.
Yeah, that is
Nothing's going
something.
on.
That is something you mentioned in the last week that's really hit home with me. When the volume's down, your volume needs to be down. I like that. I really do. Your volume needs to be down and your frequency needs to be down. You don't have to be in this stuff all the time.
No, and if you think about it, why is volume up? Because more people are playing because the price is moving, more opportunity. Therefore, your frequency and volume should be up, and then vice versa. Volume's down, there's nothing going on, then why is your volume up? And so when we had a conversation early on in the prop days, and the guy mentioned it just at one of these impromptu meetings, he said, what is the definition of over trading? Because everybody would, when they weren't trading well, they'd blame over trading. And it was like, the wrong thing to blame, because sometimes you should be trading a lot, right?
Mm-hmm.
When you're
Right.
trading well, it's because you're over trading. And it came back to over trading is trading a lot when nobody else is. That's over trading.
No, I never thought of it that way.
Yeah. I mean, that's, if you think about it, you're over trade, there's nothing going on and you're trading, you're in a personal fast market. It was too general of a reason for not trading well.
Right.
Was the way he put it. And he was right, and it doesn't have to be an exact answer for what over trading is. But one of the things is you're trading something that's not moving a lot, so it's like you're wasting bullets. Are you going to fire a gun right at no target?
Yeah, but the tricky part is sometimes you're right. It's not moving a lot. But I don't know, maybe you get into your mind that this could be the time it does take off. It looks like it might be ready to take off. It's been sitting here forever. Maybe
of course, yeah.
No
doubt.
And I don't want to miss it.
Or if you're, and I never allowed myself to get into this, happened a handful of times in 19 years, and that is if you're stuck in a trade that continues to go against you.
I've done that.
It's not going to get out now. It's going to turn now. Why wouldn't it turn now? If I wasn't long way up there, I'd be long right now. I've seen everything get long now, and it's just one of those down days.
And then there's those times where, you do get out of it, and within a few minutes, it does turn around. And then that just pisses you off. And you know what? That sits in the back of your mind next time, that it did turn around when you got out. And again, the emotions start playing with you.
Hey, bad habits are habits because at some point they made you feel good, and they do feel, chocolate cake. It's a bad habit to eat a lot of it, but you eat because it tastes good, right? So it's like,
right.
Bad habits are bad, or they're bad for a reason, but they're a habit for a reason.
Well, that's the thing with emotions. I mean, most of our emotions, they were good for us at some point in time. They helped us through something at some point in time, and we've kept them. They probably helped us through a few things at a few times, and they've become stronger. But guess what? Those same emotions hurt us in trading. They don't help. They hurt. They really do. So, but we still keep going to them because that's what we're used to.
Yeah. You got to walk your mind instead of let your mind walk you, and know there's a difference. You have to have a constant out-of-body experience.
No, you really just got to work on the mind. The mind is so damn important in this business. It really is.
Go ahead.
Even though, we talk about this thing in these markets about, well, these people are doing that and these people are doing that. I'm not buying that anymore. I'm looking at these numbers. These aren't people. These are computers. These are computers just throwing out all these orders. There's just too many for that. I can't believe there's that many people out there doing this,
Well, there is, though. There is. And they're getting stuck at certain levels. there is a big chunk of volume that comes from whether they're automated positions or algorithms, and then it's just a matter of speaking when we say he
I
starts.
know that. Oh yeah, I know. And that's the way I look at it, to matter of speak. But I just think, wow.
I was just going to say what Dave said. Computers get stuck too. So it's
Well,
like
yes, they
buying is
do,
buying.
because computer programs are written by people, and it's going to bring all the human stuff that the people bring in, that the programmers put into it.
And people think like when they hear automated, I mean, I would be guilty of this too. You hear an automated strategy, you hear algorithms, you hear something, you think that it's all working. Most of that stuff fails. You know what I
I
mean?
never think that it's working because of that. I know it's written by people, and
Yeah.
people, you know,
There
and
are some that work, don't get me wrong, but it's like just because a computer is doing it doesn't mean it's a money machine.
it just means it's faster. That's really what it means, is it's faster.
It all comes down to markets move a lot because of emotion, and it's just the same in a realistic like Black Friday. You come in and it's emotional. Why? Because prices are we know are cheap. So the same thing in trading is that at some point prices are cheap, and that's where the emotion picks up. The prices are expensive, emotion picks up, and it's almost like I gotta get in or I gotta get out if I'm short and it's cheap, or if I'm long and it's expensive. So markets move when there's emotion, man.
Yeah, and
And
it may have absolutely nothing to do with the price. It may just have, your emotions could just be taken over by the movement. Like you said, it's moving up. It doesn't matter what the actual number is. That's just a reference, but it's moving up. And you see all that volume hitting in there. So, hey, I got to get in. Same with going down. I got to get in, got to go short, just moving. And I want to be part of it. Again, that's emotion.
that is. You don't get addicted. George said this to don't get addicted to the suspense or lack thereof. You can't make
Right.
a party fun all the time.
He's right, but easier said than done sometimes.
That's the
All
one
good
thing
stuff.
about that saying is I remember thinking when someone says it's easier said than done, they're always right because it always is.
Oh, yeah.
That doesn't mean it's not possible, though.
No, it's not. It just means that you have to be cognizant of it and work at it. You have to keep it in your mind that you can do this. We can all do this. It just takes a lot of work. And it's not nearly as easy as it's made to seem with the marketing crap. That's all.
No, they don't even make it easier.
Oh, they want to make it seem like the results are easy. They don't really even talk about the
that's
process.
marketing. Think of
Yeah, that's
lawnmower.
marketing. Right. Okay, but that's what I do. I just like to go back and look at some of my old stuff. And I've got charts where I can go back, a few weeks, a few months, and just see if what I've seen today, see how often it may have shown up in the past. And I can see recurring patterns. That's what I'm looking for. So that maybe next time I will see that it's being quiet and I need to be patient, or it's getting ready to move. What's it done when I've seen this in the past? That's what I'm looking for.
When you look at patterns, and I'll say this to everyone, look at a pattern that is going to give you a sense that it's not always a bullish or bearish pattern. It's a pattern that's going to eventually move. So look for patterns that are going to have a breakout. That's always a range. And it could be a bullish pattern, could be a bearish pattern, but doesn't have to be one or the other. It's just showing it's going to move. And then use order flow and correlation to find the when moments. So you're looking for patterns, and then you're layering over the top the when moments of when could you sprinkle emotion. Once you right, because take a bullish pattern, it's not going to go up till you sprinkle emotion on it.
Right, because you need the speed. Right,
you need the speed. You need the people.
And the emotion gives it the speed.
Motion, it kind of gives you the sense of like there's a lot of people vested in a trade. Right. And when you're invested, you're now emotional. And if you're wrong, you're more emotional. You're wronger, you're more emotional. And then all of a sudden you're racing to the exits. It's the exodus of positions that make markets go up or down. But good stuff, Ron. Thanks for sharing. We appreciate it.
So long.
All right. Thank you again. I'm going to cut, or you could cut your own mic, I would imagine, right?
I don't know. How do you cut it in here? Let's see.
I got it. I'll do it for you. Boom. He's muted. But thank you again, Ron. As we go along with these Tuesday sessions, I don't want to put anybody on the spot, but you got more to share than you think. By sharing, I'm telling you, it helps get things off your chest, helps kind of reinforce good habits, identify bad ones. There's no doubt about it. As Ron put it, it's good therapy. Hey, listen, every therapy that you use or do, it's about talking, right? You go see a psychiatrist, you're doing most of the talking. You go see a regular doctor. At first, you're doing most of the talking, right? So you got to do some talking, whether it's to yourself or if I detach myself. For me, when I'm bored, I don't want to be around it. And if I miss something that comes down the wire, I have to be okay with that. But I don't want to be in an office where most of the people are gone, like a ghost town. I always hated that, like because there's nothing going on, not because they're not willing to work. It's just there's nothing going on, and the needy and the greedy are the only ones left. So that's it for this meeting. Remember, follow the dots. You don't have to predict where they're at. You just know you're going to one. And when are you going to one? What could you find to get your rear end into one? I'm telling you, this morning, it was a great sell. I happened to be bullish and didn't react fast enough. But there were a couple good. NASDAQ goes up, ES doesn't, and then it's a downside. This is a chart of the ES. I'm sorry, the NASDAQ. And 20-point range for the NASDAQ is nothing. But don't let it get you down because there are opportunities in slow markets. You just can't be worried about missing them. Now, for everybody that's here, if I cancel your registration to this meeting and you actually are an Edge trader, tell me. Edge trader is one that's invested in the Edge program, not the trading room, the whole program. So if I happen to cancel your membership and you actually should have access to this Tuesday session, just let me know. If you see your registration for this Tuesday session canceled, that's why. Don't forget, May 7th, May 14th, Steenbarger, Brett and Brent. Brett Steenbarger and Brent Nord, 7 and 14 May. We'll see you guys tomorrow in the room or next Tuesday.